SMF MMT's monthly chart, S&P 500. S&P 500 is currently overbought on the percent DS standard indicator right here. We're at all-time highs. Short term, we are overbought. However, for the bulls, it's very good because the bulls have a monthly buy signal on the S&P 500. And we stayed down here in a sell signal for months. You can see. So there's 1, 2, 3, then there's 12, that's 15 months, then there's almost 2 years we were in the sell signal on this monthly reading. It's a standard technical analysis, what the bulls and hedge fund managers, the bigger, broader people are looking at that get them all bullish. Let me go over here once again, just like I showed on the Dow. This is what happens. When you got the 96 buy signal monthly, you went straight up. When you got the buy signal over here during the 2003 up to the 2007 top with the big financial collapse, this is what happens to people who are exuberant. This is what happens to exuberant governments. This is what happened during the Greenspan era and all of it, and it collapsed. But now it's releveraged back up. So in the short term, MMTs, the thing about it is that now that we have that S&P buy signal, that means that the bear has a lot to worry about, because when you do get the pullback like here, we make higher highs. You get the pullback here and you continue to make higher highs. And we haven't had a bull buy signal on a monthly level, nor have we had such a great move. The problem is we're overbought at 90.44%. We're probably more overbought than any other time, which is okay. It means that on the S&P 500, we're going to be taking a look at that 1345 handle right up below 1349 and 1350 handle on the S&P. Right over here, what I would like to show is 1341 is half of that bar. This is that reversal one, and we're re-leveraging up. That's going to be the wall of resistance. Another thing that I would like to point out to new MMTs, that these are all standard indicators. This isn't your market maker activity that you do daily, but you want to know where the public is. And you want to know what the exuberance is. And most of the money is in the market in the short term. So when we get a pullback, you want to buy those and sell the rip. The thing that I would like everyone to know, that stocks that trade, the leadership stocks in the S&P 500, is that the more overbought we get, the harder it will be for individual leadership names to take out their highs. With sustainability highs, I'm talking. So when we get too oversold like we did, we had great rallies, like this one here, and like this one here. And when we get too overbought, like we did here at that time frame, and that green line is the percent DS, that's this public indicator here. We are very bullish to the fact that the bulls are bullish. So on that intraday level, with the elevation in the S&P, that's where those lower wholesale bid prices bounce off that bottom like a torpedo. Okay? And the thing about it is, as long as we continue to ascend, the short-term overbought is the buy pullbacks, period, in this cycle. Now, everyone's going to be expecting the S&P big rally for spring rally. Well, we've already rallied in anticipation. We're overbought. We're due for a pullback. Buy the rip, sell the dip. And that's the way it's going to be as long as we continue to stay elevated here. This momentum is only 3 months into the making. And what the bears don't understand, and most people don't understand, that we're coming right back up. We deleveraged all the way down, and we re-leveraged the trend all the way back up in here. That big money on the sideline is trying to find a home. And they make decisions looking at this. That's their stuff. We just want to know, you will know when we get the pullback that you're going to want to continue to buy. That the inflation fears and the media fears and all of that, hey, look, that's down the road. Right now is right now. And we just want to point out to you how to monitor this, where the peak is at 90.44. One of the things is this blue line is a CCI, and it's topped out and it's starting to roll over a little bit. But every pullback with the monthly buy signal will be buyable. unless there's totally a monthly reversal here. But if it stays above the zero line, that is strength in the S&P. That's where the bear is going to have their problem. And that's where you're going to want to buy the dip and sell the rip on a daily compounded level. I'm just letting people know that when we do get to pull back, everyone thinks, oh, that's the end of the world. No, it's not. We're just got to work that overbought, just like we had that flash crash right over here. That was that flash crash, okay, on a monthly level. And we were totally overbought at this time frame. And we came down, we put in what we and we did all of this analysis back. We have all the live videos. We couldn't break that. We started to re-lever up, and we've had a 6-month breakout. Now, nothing goes straight up forever, but just remember what I told you. You can see here where there's you stayed overbought for a number of months once they happen. We're only in month 3. Buy the dip, sell the rip for the short term. If there is a key bigger reversal than that, it's going to show up, but the bulls are in play. They're going to continue to stay in play, and that is your glory right there. And the thing about it is, we will have some pretty good pullbacks. You know, we can start between 4%, 7%, and ultimately the key one would be a 10% would be a great buying opportunity coming all the way back down here on the S&P 500. All of these monthly moving averages are wonderfully bullish for the bull, but the bear doesn't know when to come out. You get a pullback, you make a higher high. Everything that I've said, you get a pullback and you continue to make higher highs. There's that double month. The month of this month is not over. Everyone's anticipation of what we call spring rally coming. However, you got to take a look at where we're overbought right now. We can continue to stay overbought for a number of months and buy the pullbacks on the S&P 500. It's a perfect time for the bigger hedge fund management community to be contrarian to the fact that everyone's anticipating a big rally for spring rally. Spring is just around the corner. Earnings season is almost over for the quarter, January quarter 2011. Options expiration is going to be a big player next week. And then everyone is going to be expecting that big rally. Well, the thing about it is, last year in 2010, let me point out to my MMTs this right here. This move was when this was 1-2 of 2010. We put a bottom in the month of February of 2010. We put the bottom in and we rallied all the way up for 90 days because that was that spring rally. But then it gave it all back because we gotten so overbought, and there was the flash crash. The thing I'm going to tell you now is we're more overbought in the cycle at 90.44% on the S&P 500 on percent DS. CCI is at 163. The 10-month moving average remains at 1164.89. The monthly movement so far has been 41.65 points to the upside in the rally under VO1 down here. Okay? And another thing is below the marketplace, this pink line is a 50-month moving average, and it's flattening out. It's been going down forever, and it takes a long time for these things to turn around. That's what your other people, your community, public people look at, and it's how they make their decisions. What we're going to do, when the pullback comes, we will go short. Everybody believes there's a spring rally. I believe that that will be the perfect time to take profits. I also believe that the options expiration for the month of February of 2011 is going to be extremely price action volatility next week, and we can certainly go up before, hey, all of a sudden it's time to ring the cash register and take some profits from this last rally here of that 6-month move. What this moving average convergence divergence being the biggest thing that the bull and the S&P could have wanted to see. It's taken years to get back to a buy signal. That's the wonderful thing about understanding that your shorts are going to be shorter lived than any other time because of this. where the other bears are going to think, oh, I'm going to get more, I'm going to get more, I'm going to get this, I'm going to get that. Oh, it's going to keep going. No, it's not. It's going to pull back, it's going to bounce. And then pull back and bounce and make another higher high. So basically, we're going to find out we're only 2 months into this, and 2011 has lived up to its name with the monthly buy signal on the S&P 500. Look for the shorter term pullback, buy the dips, sell the rips, daily, short the highs, buy the rips. The momentum is here. The buy signal is here in 2011.